Okay, so we're officially here, podcast number one. Corderro Curry, myself, Good Credit Now 101 University. I'm here with one of the best loan officers, Jonathan Stroud, with Lending Hand Mortgages.
Yes, sir. How you doing?
Man, doing good.
Glad to have you in Nashville, Cordarrelle.
Man, hey, I love to be here. And y'all awesome studio.
Awesome. Yeah, we had a good event this morning. You enjoy it?
Man, I love the event, love the people, the networking, and being around winners.
Well, I love having my people from Mississippi, Memphis, come up. Come up to Nashville and just see what we got going on here at Lending Hand.
Oh yeah, most definitely. I definitely want to do a segment just so I can educate people. I know you know best about these different loan types.
Right.
If you could start off with just like introducing like FHA and what it takes to get one of those closed.
Right. The most common loan types are conventional loans. You got conventional loans that are Fannie Mae and Freddie Mac conventional loans that are government regulated loans, but they're not government loans. And then you have the government loans, which are FHA, VA, and USDA. But the most common government loan that we do a bunch of is FHA, especially in your market. FHA is a very, very big loan. So what's great about it is it allows for a lower credit score. You can go down low as 500 credit score if you have 10% down, which is pretty crazy.
Yeah.
It's not even that great of credit, but if you qualify, you can go down to 500 credit score. It's tough, but you really want to be shooting for 580. Even better if you really have a better opportunity to get a home. 640 is the mark that I would really be shooting for if you're trying to get into a house. But that only requires 3.5% down.
Okay.
So 3.5% down, and you can partner that FHA loan with down payment assistance programs that will cover that 3.5%. So it can be a grant or a second mortgage, just depends. So
Okay, what you mean by partner it with a second loan?
second mortgage. So let's keep it simple. Say it was $100,000 loan. Okay, so the down payment required of 3.5% would be $3,500. You could actually get some down payment assistance that will cover that $3,500. It'll be a second lien on the house. So typically, there's different programs, but if you were to go sell that house, you'd have to pay that lien off, or you would have a second mortgage where you'd be paying that $3,500 back, $3,500 for every $100,000.
Yeah.
You're paying that payment back monthly. It just depends what program. Some have ones that's forgivable, and some have ones that you pay. It just depends on credit score, loan to value, debt to income. It just depends, but great programs out there.
Okay. And then can you go over just a little bit about jumbo loans?
Jumbo loans? Yeah, jumbo loans are loans that are out of the conventional loan product parameters. So I believe it's 700 in this market. Yeah, in Nashville, it's
Depends on if it's high cost area.
it's high cost. Yeah, so if high cost counties, like the more expensive counties where the houses are more expensive, you have to go jumbo versus conventional. But typically it's 5% down for a jumbo loan, and those are any loans that are above the county loan limits of where you're at. So if you check your county loan limits for Fannie Mae or Freddie Mac, you look it up pretty quickly and see what those loan limit is for that county. Anything above that loan limit is considered a jumbo loan.
Okay.
So,
Okay.
what's great about jumbo loans, there's no PMI, so you don't have no PMI, but yeah, so.
But on that jumbo, just say I got one client that's trying to get just say a castle style house, and with the jumbo, would they have to add on the second mortgage for that? Could they get
No.
FHA to cover this part and then the jumbo to cover the next part?
No, FHA loan limits are even smaller, less than conventional loan limits, so so that wouldn't work. No, you'd have to, FHA only goes up to like 600,000.
Yeah, right at six.
So, yeah.
So the jumbo they got to swap over, and it's gonna be conventional when they go to the jumbo.
Conventional or jumbo's not conventional or FHA. It's considered a non-qualified mortgage product. Yeah. So
Okay.
it's just a high limit product. Yeah. So
Okay. Okay.
Yeah.
Super high sales price.
yeah, with high sales price. Yeah.
Yeah. Okay. Okay. All right. What about just say USDA? What they paying most of the people?
The
down
USDA,
payment?
you're not required to have a down payment, as long as you meet the county loan limits for that. So you just have to check your local county, see what those loan limits are, and it increases by the number of people in the household. So you also have to see if it's eligible for USDA loans. So most rural counties are, as far as West Tennessee, Shelby County is not, but there's a very small portion of Shelby County that is allowed.
Yeah.
With USDA. It's on the very outskirts of Shelby County. And there's parts of DeSoto County on the very outskirts of DeSoto County. But anything outside of that, all the area between Memphis and Jackson
Yeah.
is USDA eligible. All the area between DeSoto County and all the way down to Jackson
Yeah.
is pretty much US. There's a couple places that aren't, but yeah, it's a great program.
Okay.
Credit score, you have to have a 680 credit score typically.
Okay.
But there are some situations you can go lower than a 680. But that's the score you want to be shooting for if you want a USDA loan. So,
What's the like out of like how many people are really like getting qualified for USDA loans
Oh, a lot.
versus FHA, or what is the percentage you will probably kind of?
well, just depend FHA is a lot more people at this point. One thing about FHA, you can go, excuse me, you can go up to, one sec, should I turn my phone off? Okay, so one thing about FHA, you can go up to a higher, debt to income ratio. Typically with USDA, you can't go over 46%.
Yeah.
FHA, you can go as high as 56%. Okay, so you have a little more space there if you have a little more debt, or if your income isn't high enough. I mean, the income isn't, you're not making enough money. So it just depends. That's what it's my place as a loan officer, as an experienced loan officer, to put you in the right product that fits your need.
Yeah.
So we just got to figure out, once we take an application and we figure out how much money you make, what your debts are, what your credit score, we have to find the program that fits you.
Yeah.
So every person doesn't fit in the same box. We got to figure out what box you fit in.
Yeah.
So
And then a lot of people, they'll say it's based off of just say the credit score, how much they're getting approved for. What?
that's not true.
All right. Yeah. Explain it.
It's
Break it down.
it's more based on your income and your assets, and there's a lot of things of how much you get approved for. But the biggest thing is affordability. So sometimes I may be able to approve you for something, but you can't make that payment. So one of the first things I do when I start talking to a new client is, how much is the maximum amount of payment that you feel comfortable making monthly? That's very important. So how much can you pay? So
Yeah.
if it's if I say you can get approved for $2,000 a month, but your budget's only $1,600, we need to look at houses it's only $1,600.
Yeah.
Right? So just got to figure out once again, I got to put you in the right box.
Okay. What's the highest mortgage loan that you did all the way down to your lowest?
Oh, the highest? I think I did one for like 1.2 million. I think it's the highest I've ever done.
Okay.
Lowest I've done is like 45,000.
Okay.
So yeah, we'll do, man, if it helps someone get into a house, or if it's a refinance, I'm gonna do it. I'm not gonna turn down a loan just for now. If it's like $10,000, $20,000, that's probably not gonna work.
Yeah.
Because you may be better off just getting an installment loan from the bank for that. You don't need to go through a mortgage company for that. But if it gets you into a home, if it gets a client into a home, I'm not afraid of low loan amounts or high loan amounts.
Okay. Okay.
And sometimes the low loan amounts are the harder ones.
Yeah, I know.
Right?
Yeah.
So typically are actually. So,
Yeah.
but I'm not afraid to do either or. So
Yeah.
Yeah.
Okay.
and it keeps increasing. I mean, the loan amounts keep going up as the market changes. Okay. So, and every market is different. So I work in different markets. So every market is different. I don't even think you can find anything for $45,000 in this market.
Yeah.
In the national market, but out in West Tennessee, you might. So
What is the just say I'm finna get ready to start building. What's just the normal basis y'all like to touch when we going on stick builds that y'all like to put the bank money behind?
So stick builds, we have a product called a one close construction loan for conventional. You'd have to put 5% down on that product. You'd have to identify the land that you want to buy, and get the contractor approved, and then get the plans approved. But you would only have to put 5% down. You would actually close that loan, and then start construction. So it's only one close. So you pay interest only during the construction process. So
Okay, interest only during the construction process.
yes,
And then as soon as the house get fully built, then you start making the regular payments.
yes.
Okay, so would you say if I wanted to build from scratch, is it a tougher long process or
A little more red tape.
okay?
A little more red tape, a little more cost. You can't, it's a buyer's market right now, so you can't get your closing costs. There's closing costs involved. Closing costs can be anywhere from 3 is up to 6%. It just depends what it is. There's no seller selling you land. There's no seller to pay that for you.
Yeah.
So the cost can get it more expensive. We can also do this product with a veteran. So a VA loan, even an active military, you can do it for $0 down. So, but you still have to come with your own closing
With
costs.
the closing cost.
Yeah.
Okay, so that's a good point. So if you in the military, you got your VA loan, you can be able to get a house $0 down and still get that built and only got to pay closing costs.
Yeah, you can build a brand new house. Yeah.
That's
It's pretty cool.
That's a gem right there. That's a
Yeah.
gem. I actually didn't know that for VAs that they could use that right there too as well. And,
Yeah.
and then
Most people have no clue.
Yeah, yeah. And that's why I like to, talk, because like me, I'm like I say, I'm a realtor, but at the same time, y'all the bank. Y'all the ones that's getting the people approved for the money
Right.
for the houses. So y'all got the most insight on the best programs and what's available. That's why I like to talk as much as we can, because they help me learn more loan types as well, so I can better the clients that I'm working on as well.
You can also do a renovation loan. A renovation loan can pretty much is pretty much the same as a construction loan. As long as you got one wall standing, you can build basically a whole new house around that one wall. So you can do a renovation loan too. It's pretty much the same process as a construction loan, but do what? Yeah, it's FHA and conventional. Yes. So we got FHA. It's called FHA 203K. And then Fannie Mae has one called a home style renovation loan, and then Freddie Mac has one too. I don't think we've ever done one before, but you can do them. We can do them. It's not hard.
Okay, so yeah, this is like for our investors that do want to buy houses and then fix them up. Y'all
Yeah.
will.
Well, it's different. It's different when you're an investor. Yeah,
Okay.
you're trying. That's more like a fix and flip or
Okay.
fix and hold.
So what about?
But you can
just
do
a
it.
regular-
You can do a renovation loan as an investor. It's just considered a 20% down type deal.
Okay.
Because if you get approved for it, you just can't do like a debt service ratio, just an investor type loan. This will be a conventional loan. So as long as you can, with your debt, if your debt to income can qualify on that. If your debt to income doesn't go over 50%, yeah, you can qualify for that.
Okay.
So,
Okay.
so
I guess since this is an investment, just say I got a property about 12,000, and I need to put like another 50K in it to rehab it. Would that be a product? To
now you'd probably want to go with a hard money lender. Or
Hard
something
money
like-
lender?
Yeah.
Okay.
And we got some context for that. And there's a lot of those in your market too that we can refer you to.
Okay.
If we can possibly do it, or have a partner that does it, or we can refer you out.
Okay.
So-
Okay. So just say if a regular mother or father wanted to, live into this house, but need to fix it up, y'all got that loan.
Yeah. So if
program.
you already own the house, especially if you already own the house, that's just a refinance. You can do a refinance 203K. Yes.
Okay, so if I already own a house and I just want to
Fix it up. Fix it
remodel
up for
the
your mother,
kitchen.
yeah, or she's already living there. You can put her on the loan, and then you can be on loans as you could put her on the loan as the main owner, and she could be on the loan, and you could be the co-signer on it, not by co-borrower.
Yeah.
And you could fix the house up for her. Yeah, we could as long as the debt ratios work out and all that, you were good to go.
And purchase too.
Yeah, and purchase too. Yeah.
Yeah. Okay. Okay. All right. So like I say, that's good info right there. We do got ability to even remodel houses, even if we got them. And do we got the option to, like you say, buy something that's distressed if we're gonna live in it and get y'all to help with the cost to to fix it all the way up?
Yes. Yes.
Okay.
And then I also have and if it's just like a really small, like if they need $5,000, $10,000, a small. There's in Tennessee, we actually have a partner that they can borrow that money through directly. It's not even with us. So if somebody's just a little bit of, heck, it's the housing fund out in Nashville. They do some renovation stuff like that. They give you a small loan. It's pretty good stuff.
Yeah.
So you just need a small, like $5,000-$10,000 to renovate something. That's available too. I can put you the right people for that. So don't have all the specifics on that. I've just referred people to them over that, but it's a good program. Yeah.
Okay. Now is the key. What we don't know, we can't get. I don't care if it's $1, $100, or $1 million.
We also do. We're really good with manufactured homes, single wides, double wides. We do those. We do those all loan programs, conventional, FHA, VA, USDA, as long as it's 1976 or newer. Correct.
And USDA is 2006.
USDA is 2006 or newer. Michael's our fact checker over here. So
Yeah. Okay.
so every good team has other people on there. Every team leader has other people on their team that we can help fact check. That's a good thing about our company. We have a wealth of knowledge. So if I don't know, I don't know everything. So if I needed something, we have Michael. We have other people on our team. The owner of our team, he's owned the company for 20 years. Our lending partners, our servicers, we can ask them directly. We have systems. We can just type something in. It'll tell us an answer. So if I don't know something, we get to answer for you quickly.
Okay. How long you been doing mortgages?
I got in the business end of the summer of 2019, right before COVID. So right before the world changed.
Yeah.
So it's been a little bit of a ride, but I found my calling. Yeah, I love mortgages. I love helping people. It's lucrative too, and money follows success, and money follows when you help people. So I really enjoy doing that.
Yeah, and then I hear you say something about mobile homes. A lot of people, they don't like to touch them. Like I say, it might not be I'm the type, I don't care if they want a tiny house or RV or mobile home. No. I just want to help a person get into
everybody
a house.
deserves to be able to own a house. So renting will never, if you continue to rent, you never get anywhere. So until I got into the mortgage industry, I didn't realize how important it was, but I really understand now. So, and I think you've done a little renovation yourself, right? I think you renovated a mobile home before, right? A manufactured home. So how'd that go?
That went good. Yeah, tenants still in them now.
So you bought it and then you renovated it and then you
then put it on the market. Put a renter in there.
Put a renter in there. Awesome. How much did you have to put into it?
Probably about 10, 15,000 up in that one project. Then I ended up getting the one that was right next door to it for like 1,000.
Wow.
Then I was only had to put like 2,000-3,000 in that and had to move in ready within like 30 days.
That's awesome. So did you inherit it? Did you buy it or inherited it?
Bought that one.
Oh, got it. Okay, so I thought How much did you buy it for?
Well,
you don't got to tell me.
One. I bought it for 1,000.
What was 1,000?
Yeah.
And how much you rent that for?
1,000. I rented for 1,000.
I need to follow you, man. So that's what I'm talking about. So work smarter, not harder, right?
Yeah.
If you find a deal.
Yeah.
So you can find deals out there. I don't know how you got that for so cheap.
Yeah, you can. And then like the first one.
That's entry level investor stuff. If you can find something like that, you never know. It's crazy.
Put a little money into it, fix it up, and get a turnkey ready. Put somebody in it. The other one I had got actually it was a partner was finna get ready to just stop paying the rent because it was on a lot, so it got a lot fee. So what I did, I'm like, hey, if you don't pay another month, they gonna take your property anyway. Let me go ahead and catch all that back bills up and give you a couple $1,000s. That's how I got the first mobile home. And then the owner that owned the one next door, he just walked up one day and like, hey, you want to buy my house? I'm like, how much? It was like 1,000. I wanted to be like, is you crazy? 1,000. I'm like, I ain't even gonna second guess him. Okay, all right, deal.
Well, they say less.
Say less.
Oh my gosh. That's good stuff. I didn't know. Man, you came up on the lottery that day.
Oh yeah.
Let me hold 1,000.
I got you. You know you good for it. You good for it.
Okay. Anything else you want to talk about? We have. I was gonna say we do have for Memphis area. We have eight different down payment assistance programs. We can go with that another time. That's too much to go into, but we do have options. There's not just one option.
We need to know a little bit about that because that's the glue that most people,
right.
just even scan the surface of down payment assistance.
Well, we have in this area we have Tennessee Housing Development, which is a THDA loan. A lot of people have heard of those. which is you can do 6,000 or 5% down payment assistance. So, we have the Housing Fund out here in Nashville, is a charity organization. I've mentioned them before. They're really good. We have the City of Memphis DPA. We have Shelby County DPA. City of Memphis can, I think it's like $30,000, $25,000,
And when you say
$30,000.
DPA, a lot
Down
of people
payment
don't.
assistance.
Yeah, like,
Down payment assistance. I'm sorry, down payment assistance. The Housing Fund has a similar thing as the City of Memphis, but it doesn't run out of money, which is good.
yeah,
That program runs out of money sometimes. So if you're trying to get that program, we have another option for you. Now these programs aren't available for Mississippi. We have then we have some national programs that are 100% financing FHA.
yeah,
And then we have that will cover your mortgage. You can have a repayable and a forgivable one. Okay, there's two different options.
yeah,
And then we have 1% down conventional, which is one of my favorite programs. As long as you're 80% of the median income.
yeah,
So we can look to go to Fannie Mae's website and see what 80% of that median income is. Okay, as long as you're 80%, you can do a 1% conventional. And there's some room there, I can give it 1%. So it's based on a 3% down.
yeah,
So we're going to cover the 2%. You got to pay 1%.
yeah,
But if your credit score is good enough, there's some room there. We can add another 1% in there, so you ain't got to pay. And we're also offering a free appraisal with that program. So, and then just to try to make it work. So that's actually the smoothest of all these programs. That's a quick close. We can close those in like 2 or 3 weeks.
yeah.
So.
Okay. And what I'm paying attention to, and because I pay attention to numbers, but I'm watching how the mortgage industry, like definitely like right now, where they like basically 100% getting people into houses now for as little to nothing out their pocket. When a couple of years ago, that was like unrealistic. You feel what I'm saying?
Yeah.
Now it's like,
Well, it's still a buyer's market right now.
Mm-hmm.
So first time home buyers need to take advantage of these higher rates.
Yeah.
Because higher rates slow the sellers down. So the buyers have advantage right now. So you need to take advantage of these higher rates so you get into your house for next to nothing. You want that seller to pay your 3 to 6% in closing costs. You want your seller to pay that. When the market gets hot, when these rates get better, it's going to be back a seller's market, and they're not going to be able to pay it, and it knocks out a bunch of first-time home buyers out of the process.
yeah,
So you have to even get more creative. Right now, it's a buyer's market. So if you're a buyer on the fence right now and you're waiting for the rates to go down, that's not a good idea. You need to go ahead and get yourself in a house now. And when the rates go down 6 months, a year, we refinance you, get you into your. So what if your mortgage is over? You're overpaying your mortgage right now, say $200.
Yeah.
Okay. So the rates went down left. You're going to save $200 a month. That's $2,400 a year. Okay. So $2,400 a year, you're overpaying right now for a year. Okay. So say you're in that for a year, but say in a year it becomes a seller's market, and the rate's a little better, so your payment's a little better, but you can't get in the house because you can't cover the closing costs. So now you're paying $2,400 extra a year, but that seller gave you $12,000 in closing costs to help you get in the house.
yeah,
So what do you think? And you may have to pay $10,000 over the sales price because you got 5 offers on there.
yeah,
So right now is your opportunity. If you're sitting on the fence, if you're a first-time home buyer, you need to go ahead and make the move and do it.
yeah,
So that would be that's my biggest advice right now. Do not wait till these rates drop to go buy you a house. Especially if you're a first-time home buyer, you need to take advantage of being a buyer's market.
and just like, so what I do, like I said, I know the interest rate because a lot of people back in years ago, they was getting 3s, and now they going to, 6s and stuff like that. But I like to pay extra money every time up on my principal.
Yeah.
You get what I'm saying? So am I knocking down the interest and the time and the debt by me go ahead to paying ahead?
Yeah, you're knocking time off your loan, basically.
Okay.
So that's all you're really doing is
It's-
knocking years off, knocking months off.
Am I knocking interest rate off, or it's still the same? Or I'm just knocking the principal off of the money?
You principal,
Okay.
just the balance.
Because the interest still stay the same.
Yeah.
But they can't tax me on money that I don't have of theirs.
Yeah.
Yeah, the rate's gonna stay the same. You're basically, bringing it forward where you start paying more principal than interest every time you pay.
Yeah.
Yeah.
Because if you look at your mortgage statement, you'll notice it tells you how much on the payment went to principal and how much went to interest. And every payment, there's a little bit less that goes on to interest and a little bit more that goes on to principal. So paying extra, you're getting it closer to where you're paying more principal than interest.
Yeah.
You're shrinking time, yeah.
Screen.
Yeah, less time. If you ever notice, you look at a mortgage statement, the first several years, it's way more interest.
Way, yeah.
It's insanely amount of interest.
Yeah. So, is your advice just say on the first couple of years, should we go heavy on paying more on the principal? What's your advice?
If you can afford it,
Yeah.
or making half of a payment every 2 weeks. That'll actually eliminate several years off your mortgage.
Okay.
Yeah. So if that's an easy way to do it. Just
Making
set your payments up. Say your mortgage is $3,000, $1,500 on the first, $1,500 on the 15th. You know, actually, how many years did it knock off, Michael? It's like 5 years, something like that.
Yeah, that sounds
So,
about right.
don't fact check me on that, but something like that. So that's one way, and most people don't even feel it,
Yeah.
because what it does is actually adds an extra payment over a year's time. So,
Yeah.
so it's a good option. So most people don't even feel that, but
Yeah. And then, like I say, my biggest thing I tell people definitely when we trying to get these houses, don't overthink it. Let's start with the 4 basic things. What is your credit score? Do you file taxes? Do you have any money saved for closing costs or down payment? And how long you been on your job?
Yeah.
Those are the main keys that we need to make sure.
you don't have to be on your job for 2 years. Some people think I got to be on my job for 2 years. No, you need a 2-year work history.
Unless you 1099, we need 2.
That's your 1099. You need to be shooting for 2 years. In some cases, we can do less than that, but it's going to really affect the program. It's going to be a harder program. It's going to really affect the rate. So you want to
My regular W-2 workers.
regular W-2
job.
you just need a 2-year work history, basically.
Regular, just W-2s.
2-year work history.
Not just 2 years, just work
Yes,
history.
you need a solid work history.
But they could have been swap, just say 2-year work history, but just say if I just got on, just say at Nike, I've been working at Nike a year, could I still get
If you're straight hourly or salary, now if you have a commission job, that's like being self-employed in some cases. You're gonna have at least a year of that, to be able to use that income. Okay, so if you're 100% commission, yeah, you're gonna, like, I'm 100% commission. I would have to be on my job for at least a year.
For at least a year.
For at least a year. Just some of the programs will allow, but typically you want 2 years. 2 years of any type of income that's not consistent. It's not guaranteed. You want to have 2 years of that.
So no
Make
matter
it easiest.
So no matter what, even just say I'm self-employed and I have to do 2 years, even if I got a regular job W-2, I still want to see my full 2-year work history, even if I ain't on that job for the full 2 years.
Yeah, you can use your self-employed as part of your work history. So you can be self-employed for a year and a half. Then you took a new job, and it was just a regular hourly job. We could use that as your work history, and you'd be good to go.
Okay, they just want to see the 2 years.
Yeah, it needs to be positive too.
Okay.
You don't be working. But it's got to be positive anyways, or it's not gonna get approved.
Okay.
Because you got to have enough income to qualify.
Okay.
For the house, so.
And so that's why y'all still be like, okay, we still want to know what was y'all doing before this, even if it's done swapped somewhere now, but they give y'all the knowledge.
And you can have gaps in some cases. It just depends on what program it is and how long. You can have gaps for extenuating circumstances. Say you got hurt on the job, you had a baby, you got sick. There's different with a letter of explanation. We can verify that. There's different ways to get around gaps. So, and there's just I don't know each program or what the parameters are, but we can go if we get you doing a pre-approval, we can check the parameters, just make sure. And if I don't know something, I look it up or I get answers on something. But typically we already know.
Yeah.
So, and then lots of times if we don't know, I can do a pre-underwrite. I can send it to the underwriter. Underwriter is like the judge and jury alone. We can ask them, hey, is Corderro's income good enough to get qualified for this? What will be his income? I could just send them they can send them the documents and they'll let us know before. Yeah. So if there's any question, if I'm not 100% sure on this loan, I'm gonna let an underwriter review it before we even go on a contract.
Yeah.
So the worst thing is you go on a contract and then you can't get approved because your income's not approved.
Yeah.
So that's never a good scene.
Okay.
So.
Okay. Well, like I say, I definitely appreciate you breaking down all these different loan types, and you just let them know where they can reach you at and everything.
Yeah. You can reach me. My phone number is 615-512-8752, or you can email me at jstroud@lhmtg.com, or find me on Facebook. And if you're friends with Corderro, you can find me on his Facebook. Jonathan Stroud, Lenningham Mortgage. Happy to help. Just send me a message or DM or call me, whatever we need to do.
Let's do it. Let's get y'all into some new houses, some new keys. I don't care if we want multifamily, duplexes, or whatever. He definitely can handle and get that job done. And pull deals all the way from 1.4 million all the way down to 40,000.
Yeah, I love to do one. I haven't done one at FHA. Someone buy a triplex and live in one side, and you can use that income in that triplex or duplex to qualify. You can use that projected income to qualify, to get you qualified to buy a house. So
Yeah.
I've wanted to do one of these triplexes, but they don't come up very often. But if someone knows and wants to buy one, that's a great way to be an entry-level investor. Buy that duplex, buy that triplex, live in it for a year. After you live in it for a year, you can do whatever you want to. So
Yeah.
you move out of it, whatever, and buy your next property.
Yeah.
So
Yeah.
as long as you live in it for a year, you're good to go.
Yeah, and that's, like I say, that's a real gem right there and a real hack to be a property owner already coming in the game versus just owning one door. Like you say, you can go ahead and get 3 doors, a triplex, live in one side, rent the other 2 sides out. They can go ahead, add the projected income for the other 2 units already in. So you don't even have to make all of the money to qualify for all 3 houses, as long as you can qualify for one of them and the rent from the other 2 places is accepted to get you qualified. We can go ahead and try to work and get you a duplex or a quadplex or something like that.
Just hard to find them, but if you can find them, that's a great way to start your portfolio.
You know, I'm gonna start building them from scratch though.
There you go.
So it ain't gonna be too
Start
hard.
building.
Ain't gonna be too hard to find. Only thing y'all gotta
You
do,
just gotta get the zoning right for them. That's the only thing.
Pick out the right piece of property, and like I say, let us build it. Let the bank finance it for you, and let's get it out the way. I appreciate y'all. Corderro Curry,
Yeah,
good
call
credit
call
now.
this man too. This man has it going on. He keeps telling me all this stuff he's doing. I was like, what? You're doing this? You're doing that? He's got a lot going on. He's got a lot of things he's got his hand in. But I think he's shooting for the stars for sure.
Yeah.
So I've known him for a while, and I'm proud of him. I see he's doing big things. So he's really gonna do it, man. So he's already doing it.
Yes, sir. We just gonna keep it going up some more and put some more people in the door so they can own some like we doing.
Yeah, call Corderro. He's a wealth of knowledge too. He knows a lot about investing. He knows a lot about credit. He knows a lot how to win an offer. Yeah, he knows his stuff, man. Give him a call.
Yes,
What's
sir.
your information out there?
Like I say, make sure you join the school, Good Credit Now 101 University. I also got a free class where I'm teaching free, how to be a realtor, different VA loan program. He'll also be up in the class so y'all can be able to watch these videos. So definitely get in the school so y'all can educate yourself. If y'all want to follow me at Facebook, Corderro Good Credit Now 101 Curry. Or like I say, look me up on Instagram at Realtor Corderro Curry. And let's keep growing and getting knowledge and education. Good Credit Now 101 University.